came up from the mud. They said I'd never be none. They said I'd never be rich. They said I'd never be anything. I told them, get off my dick.
Alrighty, what is going on, guys? Edward here, back with another video. It's been a minute since I posted my last one. My God, I've been very, very busy. I apologize for that, but I promise I'll be coming with a bunch of new content. Now, in this particular episode, I wanted to discuss about ICT concepts, just to continue pretty much with what I've been doing and how I've been trading for the past month or so. And I'm getting a lot of questions, right? After this, all these videos that I've been posting based on ICT entry models, getting a lot of questions, all right? Especially the ones that, for example, let me just show you here. Normally, I'm actually going to discuss about the 3 powers, okay? Which is basically, what are the 3 powers? This is how markets move. Not necessarily all the time, but hey, this happened most of the times. If you really look into this, you will see it. So we have, what are the 3 powers? We have accumulation, okay? This right here, it's called accumulation, right? Is a point where market starts just moving sideways. Price is not going anywhere. Price could be doing something like this. It's just, it's just ranging. It's not going anywhere, right? It's not breaking any lows, any highs. It's just sort of stationary, basically, right? Now, we have, that's the first thing, accumulation. Then we're going to have the manipulation and then distribution, okay? The manipulation is where price eventually will sort of take entire liquidity from the accumulation, pretending it's actually, it's going to pretend that it's going up, but in reality, price is just going to displace to the downside. It's going to distribute to the downside. So we have accumulation. This right here is manipulation. Right? And then we have distribution. All right, something like that. So now I got people asking me, yo, Eduardo, but what if the market isn't ranging? Can I actually look for setups like this, based on ICT? Can I actually look this type of things? But, for example, in a trending market, if the price is going up or down, can I actually try to spot this type of setups? I mean, yes, you can. And I'll give you some examples once I jump in on charts. You totally can. You may not be seeing, or maybe what's happening is that the accumulation happened already and the manipulation happened as well. And you see the price is actually going on distribution. So sometimes in here, like if you go in lower time frames, sometimes you can find opportunities to get into this move. Since you missed the manipulation and you missed your entry, probably would have been somewhere here. If this is the, I don't know, a fair value gap or something right here that you're actually getting in, right? And you're trying to catch, sell, let's say something like this, right? Stop here, take profit, somewhere there, right? But let's say you miss it, the price is going down, and you wanna try to see if you can actually continue or follow the trend now, and you can probably by going in lower time frames, okay? And I'll show you what I mean in a second. Let's go ahead and jump into the chart. Not going too far, just right here. This is on Euro USD. I'm on the 5-minute time frame, okay? And we see where the market was. Price was in a consolidation right here, right? However, we're not seeing any manipulation to the upside, right? The price did not sweep any high to say, okay, we have accumulation, then manipulation, then distribution, right? Not necessarily it's going to do it all the time, okay? Sometimes you're going to see just accumulation and then price will definitely break and then just continue to the downside. We're going to see it, right? But now let's say you want to get in, like in this move, you want to go to the downside, but you want to use this concept, right? Which is you want to see a sweep, displacement to the downside with market structure shift, right? Pull back to discount, right? And then boom. So you want to see this, right? You want to see buy side liquidity being taken. You want to see market structure shift or chalk, it's the same thing, right? And then, of course, you have to understand that if you're looking to sell, you better be selling from premium, all right? So using the Fibonacci, you are going to be looking for entries somewhere here. So whatever, if you have a fair value gap right here, you have another fair value gap right here, now you have another fair value gap right here. Which of these three are you going to be taking? Let's say something like this. Which of these three are you going to be taking? Well, the one that is in the premium area. I'm going to ignore this two. Why? Because this is in discount. I don't want to be selling from discount. I don't want to be selling cheap. I want to sell very expensive. So I want price to pull back, and I'll take this fair value gap and go selling from there. Okay, I hope it makes sense. So with that being said, let's go ahead. Let's go ahead here, and this you see these gray areas right there. This is basically New York session. So I'm gonna go ahead and just play around here. Just want to say I normally trade New York session. I don't trade London, right? Just the best time for me to trade is New York, so I'll stick to New York. And just so you know, by the way, I'm giving you this example on Euro USD, but I don't trade Euro USD. I don't trade currency pairs. I trade indices mainly. But I'm just showing you that, I mean, this could play out anywhere. Okay, it doesn't matter what you trade. You can even trade crypto, so it doesn't matter. All right, so let's say right here, we're in this point. We're seeing the price recently broke a consolidation. Okay, um, is the price really going to like start displacing to the upside after seeing manipulation? Probably price is just sweeping these lows, and then maybe who knows? Price is actually going to do something like this and then skyrocket. Is it going to do it or what? So, what am I expecting here? Let's see. At this point, New York session is opening. So far, what do I have? I have this low. I have this low right here, and I have this high, the nearest high. We have more liquidity points right there, and some other buy side liquidity areas. But at this point, this is the closest one. Okay, let's say you want to continue what the trend is doing. At this point, price broke very strong. Look at the strength of this break, right? You want to see if the market will give you an opportunity. So what's the opportunity? Let's wait. So at this point, what do we have? We have price breaking to the upside. Okay, that's a very strong push. Should I be looking for sales? Or should I be looking for buys? In this case, you can wait. If you are interested in looking for sales, right? We're definitely seeing displacement to the upside, right? But hey, hold down your horses. You kind of want to see what is happening, right? Now, just by waiting and seeing this, you know, this is definitely helping you. This is what I love about ICT, this type of ICT entry models, is that you wait. The more you wait, doesn't mean you're going to be late. No, you wait for the setup to show. Let me explain you what I mean. You waited, right? Let's say you were waiting right here. Look at what happened. What is happening right here? Right? Easy to understand at this point. Price swept this high. We had buy side liquidity being taken. Buy side liquidity. Look at the displacement to the downside. Price doesn't want to go up anymore, right? So we're seeing a change of character already. Market structure shift right there. You see? So we're starting to see our entry model. What is the entry model? What we're seeing is this: sweep, displacement with the market structure shift right here. Now I'm waiting for the pullback to get into the sell, right? All I have to do right now is wait for the pullback. Let me go ahead and use the fib, because this is going to tell me, hey, where the hell am I going to actually place my sell, right? I have my Fibonacci. Understand, where am I standing? So this is the high, this is the low. So far, I don't know if it's going to start pulling back already. I don't know. You know, it could still continue dropping, right? All I have to do is wait. I want the price to show me where it's going to go. So I know that this is the 50%, right, discount. Now look at what's happening, because as I mentioned, you do have a fair value gap right here. You have another fair value gap right here, right? So which of these two would you take? Are you taking this one? No, I'm not taking this one. Why not? Because this is a discount. You don't sell from discount, you sell from the premium, right? So you want price to pull back to premium so you can sell from there. Okay? So that's why we're using the fib. So let me clean this. All right. So far, what do we have? I mean, the only fair value gap I have right here is this one. You know, so that be my entry. I'll be looking to enter, probably placing a sell limit order right there. Stop somewhere here. Where should I put my take profit? Right, standard deviation projection. Right. If you don't know what it is, I have a video about that. I'm going to leave it at the top right corner right there. Basically, by using the Fibonacci from the high right there, this manipulation move basically from this high to this low. So I'm going to use it like this, right? I'm going to go on projections, and right here I have to see where I can actually target. If I'm getting previous lows, I like that we have these lows coincidentally are going into the between the 2 and 2.5 on the standard deviation projection with the Fibonacci right there. So this is gonna be my sell side liquidity. Probably I would like to be aiming right there. Of course, we had more closed positions. We could be, this could be a target too, or this one right there, right? This all could be targets. Maybe TP1, TP2 at that point, right? So that's something like that. That's something what I will that I would be looking for. So I wait. I don't know yet if I'm going to get in, right? But I have everything planned right now. I'm going to be looking for a sale right here. I'm at premium. All I have to do is wait for the pullback to get into my zone and activate my entry, right? I have buy side liquidity, displacement to the downside. I have a fair value gap. This displacement was very strong. It's not a small break. No, it is a very strong move. 1, 2, 3, 4, 5 candles to the downside, and I do have my market structure shift. So this is telling me, hey, price also recently, broke a previous low, and we're probably, the way this is going, especially with the market structure shift, is probably telling me that it's going to go down. So I'm waiting. Aha, look at what happened. Price creates another low. Okay, I'm going to stretch the fib again. All right. I'm still, this fair value gap is the most attractive one. This one right here is not, because most of the space is actually at the premium. So I'm going to ignore that one. I'm going to pretend it doesn't exist. I want to take this one right here. So I wait, at this point, probably be placing that sell limit in there. Sell limit order placed already. Now let's see what's happening. Boom, look at that. After that, look at that meltdown, right? At this point, of course, we should be, all right, price is taking profits right here, right? This could be maybe TP1, sitting TP2 as well, right? You should be on break even already, okay? Should be, at that point, you should definitely be on break even. We wait and see what's happening. Boom, you go. All right. So you see, you can actually, let's say you did not see that consolidation. All you see is the price is creating lower lows. Price is actually, hey, from here, this is the high, lower high, lower high. Price is going to the downside, right? We're sort of on a downtrend right here. Price is going to the downside. So, this is a way, as I mentioned, that you can use the same scenario, not necessarily in a consolidation. So let me see if I can find you another example. Now, here in this example, this is on your US 30, right? Also understand that whenever, we talk about the accumulation, manipulation, and then distribution, right? The accumulation doesn't necessarily has to be huge. it could be something very small. It could be a short accumulation period. Doesn't necessarily have to be a huge accumulation, right? As long as you understand what the accumulation is and where is it forming, like price is ranging at least for a little bit, right? It could be a short period of time or it could be a long period of time. It doesn't matter. Markets are fractal, so they move the same way in every time frame. So whatever consolidation, it could be small consolidation for a small period of time, or it could be a huge on a higher time frame. It doesn't matter. It's the same. So in this case, what do we have here? We see price is sort of trending down right now. It's sort of pulling back, right? We have market actually going to the downside. We could have a channel right here, right? On Euro USD. I'm sorry, on US 30, right? So again, I normally trade from, I'm going to mark it up here. I normally trade from 8 a.m., which is New York session, to around 1 p.m. So somewhere here, right? So this is my IRA. This is where I'm going to be looking for a trade, right? So I'm waiting for New York session to open, right? And all I'm seeing at this point, you see, there is a small, even though we're trending to the downside, there is a small consolidation, small one, right? Price is not breaking these lows right there, right? So I know New York session is about to start. So we are in London. Let's see what is going to happen. Is as soon as it opens, let's see. Boom, we're in New York session now. Now let's see how it's going to react. So look at what we're having. We're having price is sweeping. Okay, remember, we're still in a downtrend. Okay, we're probably looking, since this is looking like a bullish flag, we're probably looking to buy since we're having the price sweeping some lows. Okay, some liquidity right there. Let's see. So right, we keep waiting. Keep waiting. Price sweeps another low. Very aggressive. That right there. Now let's see what happens. We have another low. You see, price is it wants to go down. It's not telling you it's ready to move up yet, or we don't even know if it's really going to go up. All I know that right here, the structure that is forming is definitely bearish. It's still bearish. Like for me to say, for example, hey, price is going to go up. Well, we'll have to see maybe a break of this high, right? This would be my market structure shift, right? But we don't know if it's going to break it. The previous break market structure shift would have been right here, right? But because price broke again another low, so it switched to this one. So right here, this would be my market structure shift, right? So waiting for this. And now look at what's happening right there. Look at that, right? This is New York session. So price is breaking that strong, right? Very, very strong momentum. So this was our last buy side liquidity that we have. You see, it comes in very different models. This is what I mean. This is a consolidation, what we're having right here, right? And then we have manipulation, very deep manipulation. And now that move to the upside, that strong displacement is telling me, yo, this is probably going to now distribute to the upside, probably, right? Now, I mean, after this strong move, what time is it? 9:30. This is the New York Stock Exchange opening right here, right? Now, what do I have to wait for? What should I wait? What is it? I'm waiting for a pullback, right? So let's wait for the next candle. Next candle sort of starts pulling back, and you see what we have right now already in there. Look at that. So this is my fair value gap, right? And so far is the only one that I'm having. So I have a fair value gap right here, right? Now, in this specific area, you use the fib, right? We're going to use the fib from here to here, right? So here we go. So far, this is the only fair value gap that I have, and most of the space is actually in discount, right? I'm in discount right here. This is discount, and this is premium. If you're looking to buy, right, we want to buy from discount. You don't want to buy from the premium right here. This is a P, right? So you want to buy from discount, from this area right here, especially in my fair value gap that I spotted right there after that huge pump, right? So now that I have that, at that very moment, at that point, it's up to you. You could be placing your buy position somewhere there. Let's see how maybe this thing looks in lower time frame. Probably we could maybe find a better entry. Sometimes you can go in lower time frame to see if you can refine your order block just to have a better entry. It's up to you. You don't have to do it necessarily. But for example, on the 1 minute, we see this aggressive move to the upside, right, on the 1 minute time frame. But the fair value gap would be somewhere, it's here, like it's a lot lower. It would be somewhere there. I don't know if that one would be playing out. I don't like refining too much. I think I would have stayed with the 5 minute, to be honest, because we're trying to get our entry somewhere here. Want to make our entry at the fair value gap. So if you were looking for that entry, stop would be somewhere here. Now we use again the standard deviation projection from the low to the high right there. Where is this aiming? It's aiming the target, yeah, at least here. At least this high would be, my first buy side liquidity somewhere there, right? Maybe that's the first target, okay? But I like this high, right? As a last buy side liquidity. Could have taken it as well, right? But especially this one, okay? Because price tends to start reversing. When it gets to this area, it could reverse. Now, let's see anyways if it's going to react to 1 minute. I rather the 5 minute, to be honest. To be honest, I like the 5 minute. Plus, I can also see a breaker block right here on the 5 minute. I can see a clear breaker block. So it's overlapping. We have a fair value gap. We have a breaker block. Let's see if price actually is going to get to the zone. I don't know. Let's see. Price is pulling back. You see what happened, right? Did not get to the 1 minute fair value gap that I marked up. It just filled the 5 minute one. That was the cleanest, I would say, just right here in this scenario. I would have entered at the 5 minute. Okay, would have looked something like that. It's not bad, to be honest. It's not a bad entry. It is a nice entry. The price actually went into the zone, went into discount, and then price pushed up, almost hitting the first TP right there. Struggled a little bit, but then started pushing up. But look at what happened. Look at what happened, because it did give you the final one right there. That price reach. Look at that. Right? That was a very, very strong push. So you see, we were actually sort of downtrending. We were not in fully consolidation. Price was moving to the downside. And then the last move, after, let me do it again. Price was doing like this, okay, boom. And then the last move, it consolidated a little bit, then swept that liquidity, right? Taking that liquidity. And then from there, strong displacement to the upside, pulling back to discount, and then boom, let's go. So you have your formation, right? So the little accumulation happened right here. This was a little accumulation. We had manipulation and then distribution to the upside. So you see, it was little. Doesn't have to be an entire zone. If you look at this also, like if you look at it this way, for example, you stretch this line, price even swept these lows right here. Yeah, well, that those lows were swept with London session. So I don't trade London session, unfortunately. Um, so this right here, New York session, was the one sweeping these London lows before actually distributing to the upside. So I hope it makes sense, guys. I hope I was able to answer most of these questions. That when it comes to the three powers, the accumulation, manipulation, distribution, you're not going to be seeing them all the time, but it's a matter of like understanding that doesn't necessarily, the accumulation doesn't necessarily have to be big. It could be very little. Like the market could be downtrending, something like that, right? And then all of a sudden, there's a little consolidation, maybe double bottom, like a double bottom like that. And then price sweeps, then displays to the upside, and then boom, this is it, right? So what you have here is very little. You have accumulation, manipulation, and then boom, distribution, right? It can literally happen like that. Doesn't necessarily have to be a very big consolidation, right? And then something like that, and then sweep, displacement, boom, and then go north, right? Doesn't necessarily have to be like that. You could still catch this thing on a trend, even if it's a downtrend or uptrend. Let's say price is pushing up like this, right? Sometimes you're gonna find something like this, boom, price sweeps, and then we have displacement to the upside, pulling back, and then boom. You see, so you know that you are in an uptrend. Price is probably doing this, or it was doing this, right? So we know that we are in an uptrend. But you see that there was a period where the price was more than enough, just a double bottom, especially a double bottom. It's actually good. So we can say that there was a little accumulation right here, manipulation, distribution. You see, within the same trend. So whenever you spot setups like this, it's really nice. And this setup is this one right here. We were actually sort of bullish right there, coming bullish. Price was just pulling back. And at the end of this little downtrend, we're seeing this example. The price is giving us the setup, right? And this is what it's all about, guys. So waiting, being patient, knowing when to trade, okay, especially if you're trading like indices, US indices like US 30, Nasdaq, S&P 500. Don't be trading this indices during Asian session, please. Okay, you have to understand that these are American indices. They move better during New York session. If you're gonna trade them during Asian session, I mean, you could be lucky a couple of times, but it's not. Normally there's no volume there. There's nothing to do. You know, very little. You're gonna be manipulated as soon as London hits or New York session hits. You're gonna be stopped out most likely. So what should I do now, Eduardo? Well, you can. I mean, there's so many pairs you can do. You like trading Asian session? Well, you better find maybe a pair that works, that moves good during Asian session. Then maybe I don't know, USD JPY, GBP JPY, um, Aussie pairs. So Australian dollar with US dollar. There are some pairs that actually they do move better during Asian sessions. So try to look for those, and maybe don't trade indices if you don't like, or you don't have the time to trade indices or American indices. Maybe you can trade, I don't know, from the UK, I don't know, UK indices, or from Germany, the German 40, right? Depending on what part of the world you're located. So it's good to understand. Okay. So like, when is it going to have, when are you going to be having the best setups? During the best times. Okay. And what best time is that? You're going to have to find out. Like indices, like US 30, Nasdaq, S&P, best time to trade is New York session, period. You can find some good setups here and there from time to time during London. Yes, you can, but not all the time. Okay, most of the times, New York session. So I hope it makes sense, guys. Thanks again, guys, for watching. Let me know what you think. Leave your comments below. Give it a big thumbs up. It motivates me to keep posting content for you guys, very often. Make sure to follow me on my Telegram, on my free Telegram there. If you're interested in learning deeply on how I'm trading right now, how I'm teaching, how I'm mentoring, make sure to visit my website, teamprofitsenglish.com. There's a bundle that I'm offering right now. Go check it out. And there's a cool discount right now at the moment. So go ahead, and I will see you guys in the next one. Take it easy.